And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to the market recap for Wednesday, August 31st, 2022. I am JD, filling in for Mr. Hoagland this afternoon. As always, thank you for choosing to spend your time with us. Feel free to drop any comments or questions in the chat. And don't forget to hit that lucky like button so you get notified every time we go live. My apologies if you joined in this morning for the market forecast. John Hoagland was out and I was supposed to be filling in. I don't use this streaming software every day, so there was a little mishap. When I went to open it up, I was prompted to update the software before logging in. Then I couldn't open it, so I did a restart. Eventually I got in, but my workspace was missing, so I had to start rebuilding that. It turned into another problem. But all is well now. As you see, here we are, and here we go. Let's take a look, see who's in the room. Anybody joining us today? David Torallo, hello there. Thanks for joining us. Everybody else, welcome. Let's just dive right into some charts, shall we? Let me cue these up real quick. Okay, here we go. We have our daily of the S&P chart. Today was, a bit of a non-event for the ES. All day long was held to about a 60 handle range. Volume sort of picked up towards the end of the day. We're starting to see the series of lower highs and lower lows. Prices have spent pretty much the whole day trading underneath this 58-day moving average right here. See, it tested it early on, and now we're testing weekly kickoff low going into the close. We also would have what looks like this little sort of head and shoulders pattern up here at the top. I didn't draw a neckline over here, but if you visualize it, the distance from this high at 43.28 to this neckline is roughly 200 points, which is also the measure move target. We broke through this neckline last Friday at around the 41.15 area or so, give or take, giving a target price of around 3,900 roughly. We also see momentum down here, looking at the slow stochastic oscillator, still pointing towards continued weakness for now. And closing out the month, the ES was down a little over 3% for the month of August. Peeking at our 4-hour chart. So we got quite a bit going on here. Let me scale it out just a bit. You get a better look at this little head and shoulders pattern that I just talked about. We can say the neckline is closer to the 4100 level here, right? Making our measure move roughly 220 points. I said 200 earlier. That would give us a price target of around 38.90 area. I also have these trend lines that go back to the slow from July 14th, sort of a play on Elliott Wave and Gann mixture. I read about it somewhere. So really just kind of testing it out. So these trend lines go to previous bottoms, and sort of the faster these lines flatten out, the more significant this down move could be. Just something I'm keeping an eye on. And like I said, right here, closing right around weekly kickoff low for the day. Here's our 30-minute chart. So we didn't get a chance to talk about it earlier, but overnight inventory was fairly balanced. We opened regular trading hours just side of yesterday's value area, then spent the majority of today's session trading back inside of yesterday's value. Then just kind of jockeyed around the point of control here up until the last hour or so when we started testing our weekly kickoff low. It looked for a minute like we were going to get a close back inside of value, but you could see here just in the last half hour, this market's moving south, and we likely close right around the low tick of the day. Other than that, it was a choppy day. Volume really dried up early on, and then we got this nice late spike here. Days like this, there was some indecision early, but then they made the move right at the end. If it had continued to be an inside day, would have kind of been a signal for continuation, but we're getting that sort of weak continuation now anyway. So with that, let's take a look at crude oil. Here's our daily of the October contract. Crude was down about 4.5% going into the open this morning, and started to recover nicely, but now back towards the lows again. I think that little boost had to do with the EIA petroleum status report showing crude inventories dropping by 3.3 million barrels last week. But then the sellers just popped right back in. Overall, I read a few articles this morning about how the demand for crude oil has been dropping in recent months. That's likely keeping this market range bound right now. You see this range going back to early July here, just really moving sideways. Here's our 4-hour chart. Here you can see this little rally a little more clearly. Overall, we rallied up to almost to this 10-period moving average right in the middle of our weekly kickoff range, or right in between weekly kickoff high and weekly kickoff low. Like I said, ultimately, it still looks kind of range-bound for right now. If you fancy yourself a range trader, this market should be paying you. It's just been failed breakout after failed breakout. What's going to take for this market to really take off again, I don't know. But it has closed lower for the third month in a row. That hasn't happened in about 2 years, so take that for what it's worth. Even so, it still looks sideways to me. Here's our 30-minute chart. Here we see our gap lower to open overnight. We see our gap open overnight. Quickly got filled during regular trading hours. This rally brought us back in the valley from yesterday and sort of tested this point of control. Just barely, almost getting up there. But there just wasn't enough buyers to keep this market propped up later in the day. And here we are, closing outside of value today, right on the lows of the session. And like I said, there is some weakness in this market right now. We haven't seen 3 consecutive monthly lower closes in crude oil in 2 years. It's been 2 years since that has happened. So there is some weakness in this market right now. Over to our Nasdaq chart. Here we see pretty much the same thing as the ES. Choppy inside type of trading day with a little bit of drop in volume early on that recovered later in the day. We didn't really get a test of yesterday's high or low, and we're starting to see that series of lower highs and lower lows just like the ES, and prices are trading below this 50-day moving average and the VWAP right here. Momentum is still signaling lower prices, and the Nasdaq has closed out August more than 4% lower, so just a little bit worse than the ES. We're testing our weekly kickoff low right now also. Here is our 4-hour chart. Here we have sort of a similar head and shoulders pattern that I mentioned in the S&P. Actually, there's actually kind of 2 of them. There's a small one at the top, surrounded by a larger one. The smaller one hit its measured move, and this larger one is sort of in play right now. Again, I didn't draw a neckline here, but I'm sure you can visualize it, and we're clearly trading below that neckline right now. I did not give an actual calculation for the measure move, but it looks to be around 800 points, which would put our target area somewhere around the 12,000 area. And we've got these little back-to-back bear flags right here. If you drew a bear flag line yesterday, then today you would have gotten your breakout on this 4-hour chart. Here is our 30-minute. Again, similar to the ES, overnight inventory was fairly balanced. Prices open inside yesterday's range, but outside of value. Quickly turn around after regular trading hours open and spent a good chunk of the day trading inside value from yesterday before closing out on the lows. It was a choppy trade. Volume kind of petered out early on, and then we got the late spike, just like in the ES. Again, sort of indifferent the last couple days. Indifference usually leads to continuation. But I will be patient to see how this one plays out tomorrow before doing anything. I'd like to see some follow through first. Here is our gold chart. Here's a daily of the December gold contract. You can see here we're starting to make a series of lower highs and lower lows, which is obviously bearish. We have the small bear flag from last week and a breakout to the downside. We're trading well below the 10, 20, and 50-day moving averages, and we have a close below weekly kickoff low. This market is in a nice little downtrend right now. There's no doubt about that. Looking at our 4-hour, here's a nice close-up of our bear flag from last week and the subsequent breakout below. Look at this, 11 of the last 13 4-hour bars close lower, and volume has been stronger than it was mid-month, that's for sure. We did get a test of this 10-period moving average today, and the weekly kickoff low, which kind of almost coincided with each other, just a few points apart. But obviously buyers ran out of ammo, and here we are, right off the lows. Closing right on the lows of the session, I should say. These weekly kickoff levels are more like inflection points. I know I've heard Hogue talk about them before, and people have asked about them. We view them more as inflection points where traders might start thinking about adjusting their inventory. Longer term traders might start thinking about adjusting their inventory. So a close below here is a nice sign of weakness coming or continuing. Here is our 30-minute. We see overnight inventory was short. Regular trading hours are open with a gap lower. Gap is filled pretty quick with this run up to weekly kickoff low, which is also right in line with yesterday's point of control here. These overnight shorts are weakly positioned. Hogue likes to call them the pea shooters, the small traders, hoping for a move overnight. And I'd bet that this rally throughout the day blew most of them out before turning back and just grinding lower again. Here's a continuation chart. We're about to take out these intermediate lows here from July, where they are likely a few stops hiding out. And we also closed out August lower for the 5th consecutive month. That sounds like a bit of a bear market to me. 5 consecutive months of lower closes and this nice downward trend. We also have momentum still pointing lower in the slow stochastic oscillator down here. So there's weakness in this market. That is for sure. Kick over. Bill Phillips, Kenneth Powell, Sarah Hall, Phil Kuhn, Sarah. Oh, thanks for joining, Sarah. Appreciate it. Dan Emmons, good news. Just passed step 2 of the combine. 150K challenge complete. Heading to the funded account. That is great news, Dan. Proud of you, buddy. Time to get paid now, right? Remember, if it ain't broke, don't fix it. Use what got you here. Stick to the game plan. All right. With that, for tomorrow's economic calendar, we have the Challenger job cut report at 6:30. Excuse me. Jobless claims at 7:30. Productivity and costs at 7:30. PMI at 8:40. PMI at 8:45. ISM. Construction spending at 9. ISM and construction spending at 9. EIA natural gas report at 9:30. Raphael Bostic speaking at 2:30, and Fed balance sheet at 3:30. Those are all central times. Oh, also to note, if you want to stick around today for a few minutes, we have a new funded trader interview about to hit the waves, the airwaves. So if you stay on the line, you should be automatically redirected to it. This interview is with our old friend Ephraim from California, who's a longtime Top Step trader. He's going to talk about his experience going from the trading combine to the funded account on many occasions. I also hear he's quite an affinity for Teslas. So stick around and watch that interview. It should be pretty great. I have not seen it yet, so I will be watching immediately afterwards too. Other than that, Mr. Hoagland will be back tomorrow. He just had to step away for the day, take care of some family business. Obviously, there was no group coaching today. Back tomorrow with Make Hoag Money and the market forecast. And with that, I hope everybody had an excellent trading day. And I will let everybody get back to your daily lives. All right, everyone. Have a great day. We'll see you tomorrow. Trade well, everyone.